If you're looking to start a dog boarding business and you need to create a set of financial projections, maybe for a potential investor or maybe for the bank to get a business loan, then you've come to the right place. We have created a financial projection template built specifically for dog boarding, doggy daycare, dog grooming, dog training type businesses. And I'm going to walk you through how to use this template. I've got it filled out with some default data just to kind of show you how it works. And I'm going to walk you through how to use it so that you can create your own set of financial projections. But first of all, my name is Adam Hoeksema. I'm the co-founder of Projection Hub. And over the last decade, we've helped over 50,000 entrepreneurs create financial projections for potential investors and lenders. In this video, we're going to be looking at our dog boarding template specifically. And I put a link to the template down in the description of the video below. So why don't you go grab that so you can follow along. While you're down there, make sure to like the video and subscribe so you can help us get the word out and help other entrepreneurs launch and grow their business as well. So with that out of the way, let's go ahead and dive in. Okay, so we're going to start kind of with the end in mind here. So this is our at a glance tab, and this is kind of the deliverable at the end of the process. Once you've created your projections, you'll get this nice profit and loss at a glance, some nice summary data about boarding and daycare, the number of nights or days sold, your capacity, average capacity filled. If you have grooming or training as well in your business model, we have some data around that as well. And you can see some nice different charts and graphs here. You'll also get a 5-year income statement summary, which is kind of standard what the bank is probably going to be looking for. So a 5-year income statement summary, cash flow summary, and a 5-year balance sheet summary. Those are all annual numbers, but you'll also get the 5 years worth of income statement broken down by month as well as a cash flow and balance sheet all broken down by month. So you get all that detail that you might need, as well as those nice summary reports. But in order to get here, we have a little bit of work to do. So we're going to jump back to our input assumptions tab here, and I'll walk you through how to fill this out. So any cell that's highlighted in blue is an assumption that you can change. And so we've got our company name, Adam's Doggy Boarding and Grooming, and we've got a start month. I'm going to put in $100,000 of my own money to help start the business. So we've got the personal investment. You could have other investors. You could add in other investors here as well. Here you'll want to pick the number or what month the money's invested. So we're saying here month 0, which means right away. We're putting the money in to start the business right in month 0. Accounts receivable. We're saying that 100% of our customers pay us upfront, basically. So we're not providing terms to anybody. And accounts payable, we pay 80% of our bills right away, 20% we pay on a 1-month delay because our suppliers give us terms. You can put the initial amount of inventory that you have on hand. It could be food and supplies for the animals. And then here what you'll put is what's the average amount of inventory that you're going to carry on hand as a percentage of sales. So this probably needs to be a relatively low amount because this is going to be a percentage of your total sales. So maybe we pick maybe 30 is too high, maybe 10%. All right, and so we're saying, hey, we're going to build an $800,000 building, or maybe we're going to buy a building and build it out for our dog boarding facility. So we've got $800,000 building here, furniture of $10,000, and equipment of $50,000. We purchase all those on month 0, so at the beginning of the projection. Now, if you think, hey, in the future I want to expand and I want to add maybe additional equipment or additional kennels out in future months, you can add other additional line items and just put, for example, like month 12. If you want to add those kennels after the first year, you could do that. And then we've got an SBA loan here of $800,000. So this table is going to tell us how much cash do I need. So what it's telling us right now, it says starting cash is not sufficient. And that is because it thinks we need $971,000. That is the $860,000. So we've got $800 for the building, $60 for furniture and equipment. So we've got $860,000 worth of fixed assets that we need to cover, plus this inventory of $5,000. And we've got $100,000 in investment and $800,000 in our loan. But the model thinks, hey, we should probably have a buffer, a recommended buffer, and some working capital here just to help cover those initial months. And so the model says, hey, you'd probably be good if you had $971,000 in this example. And so that's why this model is going to say starting cash is not sufficient. In reality, $900,000 might be enough to get the doors open, but it might not be enough buffer if anything goes wrong. So I just wanted to point that out to you. All right, let's jump to the input revenue tab. Now, this is where most of the work is done. We can set some kind of global price increases here. So we're saying, hey, all of our prices are going to increase by 5% a year, and our direct costs and our wage expenses are going to go up by 3%. All right, so here's where we can enter in our boarding and our daycare revenue assumptions. So I've got this broken down by different categories of animal, and then whether it's boarding, like overnight boarding, or daycare. So we've got large dog, medium dog, small dog, cat boarding. And here we're saying how many slots are available. So, almost think of this as a hotel, right? How many rooms do we have available? And maybe we have different size rooms. Only got so many rooms with a king bed at the hotel, right? And so there's only so many rooms available, kennels available that could support, a large dog perhaps. And so you can put in your capacity here. And then you'll have different price points for those rooms. You might have different price points for the weeknight, which maybe isn't going to be as busy, versus a weekend. And so you can put in different prices there. And then this is add-on revenue. So if you're going to try to upsell, if you want your dog to have, spring water from, a special spring in Africa, shipped in, that's going to cost you extra, right? And so if you want all the premium upgrades, there's the ability to do add-on revenue for different services here and products. And so what you're entering in here is the average that a customer is going to spend in those additional add-ons beyond just the price for the night. And then this is your cost. So what's it going to cost you to feed the dog and any other supplies you need for the night? And so we're saying, hey, we're going to charge $60 plus $6 in additional add-on revenue, but it's going to cost us $10 worth of supplies, food primarily to take care of the dog for the day. And then we can do the same thing down here. You can use the same table for daycare. So if you offer daycare, doggy daycare as well, you can enter in your capacity, price points, and all the same assumptions there for that. From there, you're going to want to enter in what percentage of your weeknight and weekend capacity is filled. So again, remember, this is your capacity here, the number of rooms you have available. So here we're saying 50% of our capacity is going to be filled on weeknights and days for daycare, and then 60% capacity for weekend nights and days. And we have the ability here to say, hey, we're never going to get over 90% capacity just because of the logistics of it's going to be difficult to ever just for a whole month be perfect at 100% capacity. And so we're assuming 90% is the maximum capacity we'll hit for a month. And we're going to grow our capacity by 10% a month. So you can see for this first 6 months, you can manually enter in what you expect your capacity to be. And then after that, this 10% growth rate, annual growth rate, is going to start kicking in for these future months. And you can see over time that capacity will go up. So then this is going to project the number of weeknights or doggy daycare days sold and weekend nights and days sold. And that will allow us to project our revenue from boarding and daycare. Now we're going to have some direct expenses related to the boarding and daycare. So we'll have probably have some front desk staff to check in the animals when they arrive or when they're being picked up. And so you can put in the number of staff, the average hours the staff are working per week, and their hourly rate. And then we're also going to have caretakers for the animals, right? And so we're saying, hey, we're going to have 4 caretakers averaging 40 hours a week at $17 an hour. And then maybe we're just going to have some other staff on hand to help out. Maybe they're cleaning, maybe they're preparing food, whatever it is that they might be doing. We have a slot at least to enter in additional staff here, and hours and an hourly rate. And now this cost of goods sold for add-on revenue. So what this is saying here is that your add-on revenue, we are assuming a 25% cost of goods sold for your add-on revenue, meaning if you sell something, a special water for $1, it costs you 25 cents for that water, meaning your cost of goods sold for the add-on revenue is 25%. So that's what you want to enter there. All right, now let's move on to grooming. So for grooming, the way we're modeling this is we're saying, hey, we have a certain number of groomers on staff. We can enter that assumption. And then the number of grooming appointment slots available per groomer per month. So we are now saying, hey, we have 2 groomers. Each one can do 200 slots per month at max capacity, meaning a total number of grooming appointments available is 400 per month. And again, we can enter in our capacity filled. That is going to allow us to project based on our capacity and then what capacity filled we have. We're saying we have 160 monthly grooming appointments that are actually going to be purchased. And then this table helps us break down of those 160 grooming appointments. 40% are large dogs, 30% are medium dogs, 20% are small, 10% are cats. And here's the different price points we have. With the average labor cost of the labor cost would be what you're paying the groomer to provide the services. That will allow you to project your grooming revenue. Now, we also know that a lot of grooming facilities have kind of the self-wash tub option. And so we're saying, hey, how many self-washes do we think are going to be booked at our facility per month, and so you can manually enter that. So what we're saying here, by month 6, we're going to have 80 self-wash bays booked for the month. We can add an annual growth rate as well. And then the same thing, you may just have one size tub and one size self-wash bay, and that's fine. But I wanted to give you an example. If you have different sizes, different features, whatever that might be, might have different price points and different cost of materials, and you can break down the percentage for each. All right, now we also have the ability to add in training. So if you want to have a 1-hour training session, you have an average price here of $100. We have number of slots per day of 25. We're saying the labor cost for the trainer is $30 for that 1-hour session. And we have supply costs for treats, maybe per session of $5. And then maybe we also have a training boot camp. So that's priced at $500. And there's only 1 slot available per day. And maybe we just have that once a month or once a week. Maybe it's once a week and we have 7 animals that can come to a class for a boot camp because we don't want to have too large of a class. So that's how you could enter that assumption in. Labor cost of $150 and supply cost of $25. And then again, we have the capacity filled model here to help you figure out total training revenue. And this actually should be, we want that to be total training sessions, actually, not revenue. And then this is our total training revenue, $36,500. And again, we'll have training direct costs. Now, we've already got the labor cost built in up here, but there could be some other direct costs like admin staff for the training portion of your business. Maybe you have someone responsible for setting up the training, getting appointments set, getting people their information that is separate than the trainer themselves. And so maybe they just work 5 hours a week at $20 an hour for the training business. So you can enter in those assumptions. And then lastly, we just have an other revenue section. So anything else you might be selling, you just want to put in, hey, we think we're going to sell $2,000 worth of leashes and dog bowls and doggy t-shirts and whatnot with our branding on it. We're going to sell $2,000 a month with a 10% annual growth rate. And our cost of goods sold, our direct cost for that is going to be $500. And that completes your revenue and cost of goods sold projections. Now, if you aren't providing all of these services, what you'll want to do is just zero out certain sections. So the easiest thing to do is turn the capacity down to 0. Well, you can leave everything else the same, but if you just say, nope, our capacity, we're not doing training, and so we're going to put capacity at 0, you'll see that revenue goes to 0. So that's the easiest thing to do. And then if you just want to hide sections, the way to hide in Excel, you just highlight a section that you want to hide. So I want to hide all these rows. I'm going to right click and then click hide. So you'll want to zero out and hide sections that you don't need. All right, then let's jump over quickly to our input other expenses. And here we can just enter in different expenses. So we're saying, hey, for advertising, we've got advertising, and we're saying this expense is a percentage of revenue, total revenue. And we are going to spend 8% of our total revenue, so 0.08, 8% of our total revenue on advertising, just across the board. Now, accounting, we're saying, hey, that should be kind of fixed, a fixed rate. And so we have that selected as fixed, $500 a month. And then you can see up here, we've got this inflation rate that kicks in. So in year 2, our price point for accounting goes up 3% due to inflation. You can see different expenses that you can enter in here, either as a percentage of revenue or a fixed dollar amount. And then lastly, we have a salaried position. Now, we have already put in a lot of the labor expense for the caretakers, for the grooming and daycare, for front desk staff, and all those direct, the groomers and trainers. Put those direct labor expenses in already. So you don't want to re-enter in those salary positions here. This is only the salary positions that are kind of like the overarching positions, not tied to a specific business unit. And so I've just got a general manager and assistant manager entered in here, starting in month 1. So they're going to start in the business right away, ending in month 60 at the end of the projection. So it's a 5-year projection. And then we've just got one of each of these employees, and we're giving them a 5% annual raise. And with that, brings us back to our at a glance tab, and we have a set of 5-year financial projections. So if you have any questions, please leave a comment in the video comment section below so that others can benefit from your questions as we answer those on the video. But also feel free to reach out to us at support@projectionhub.com. We'd be happy to try to help. All right, best of luck as you get your business started. Thanks.